Hi, this is Joe Rabil with Invest Like a Pro. I'm going to show you a 10-year back test of the strategy from my book, Invest Like a Pro. And, I know the first question in your mind is why would someone give out a strategy if it's a great strategy, why would they give it out to someone else? And the reality is that most people aren't going to use it, or if they do, they'll try it and then they'll stop using it in the first drawdown. And the reason that's the case is that you really have to make something your own. It's got to be the type, you got to take ownership of a strategy before you're going to be successful at it. So I feel like I'm going to give you the basis of something that could work very, very well. And I think if you understand the idea behind it, you could probably make some minor changes to it and make it something that you feel very confident about. But if you're really going to make it something that's important to you or something that's going to work for you, you're going to have to go through a lot of charts and go back over time and maybe browse through a bar by bar and put yourself into those positions. And it's called basically going through a walk forward test. And that's, I think, really the way to make it feel like it's yours and something you've lived through and been able to kind of create yourself, at least to understand better. Because looking at the final numbers of just looking at the results is a lot different than going through each stock bar by bar. So I'm not suggesting that you go through all the trades and all that, but pick out a couple of stocks and understand what's taking place if you really want to use something like this. So anyway, a few things I also want to mention is that the tighter the stop you use, the lower your win rate is going to be. So that's just consistent. I've done a lot of back testing and it's very, very consistent no matter what the strategy is. You got to be aware of that. The negative with a tight stop, I mean, there's a lot of positives using a really tight stop, but the real negative is by lowering your win rate, it makes it much more difficult from a psychological standpoint because you'll go through longer streaks against you where you'll take 4, 5, 6, 7, 8 losses in a row potentially if you have a really tight stop. And so you're really trying to strike the balance between how tight you want that stop and how big your win rate should really be. I prefer to have more wins than losses as a top priority, but I do believe where you make most of your money is going to be the average size of your win versus the average size of your loss. And I want to see that number north of 1.5, that ratio. So if I'm, if I make a win, I want it to be about 1.5 the size of my loss. So those are just kind of some basics that I think are to keep in mind no matter what approach you use. But I want to get into and this is actually the first thing I want to mention. This is actually prior to the intro to my book. And I think it's very important and obviously I put it in there. It goes back to 1942. W.D. Gann was one of the better traders, researchers of all time. He's sort of legendary. But one of the things he talked about was that, that long pull trades or following a definite trend is really where you're going to make most of your money. But you have to know certain rules and make sure that a stock is getting out of a range and starting a new trend. So that's really what the basis of my book is about and the main strategy that I use. So now let's look at what needs to take place inside of any type of a setup or a trading strategy that you're going to create. And if you're going to create this thing, create one of these, you don't have to use the one that I'm using, but you can use it as the basis of something that you want to create. After you see the numbers, I think you're going to realize that you probably want to use something very close to what I'm suggesting. So the first thing is the setup, and that's really what conditions need to be present before you're entering. And usually it doesn't include price. I mean, price isn't really what's used in this type of category. It's more like I'm looking at MACD doing one thing or ADX doing something, or in the case of what I'm going to show you, it's going to be the moving average configuration. and I'm using it in multiple time frames. The second thing is the trigger. The trigger is usually based on price, and it's better if it's based on price. And so that's the level that needs to be crossed either on an intraday basis or on a closing basis that would tell you that you need to enter the position. The third thing is your trade management, and that consists of an initial stop. It's essentially you're going to be in the position, you're going to have an initial stop, you're going to have a trailing stop method, and then you're going to have a method of taking profits. And those are all important things to have in mind if you're going to create some type of a strategy. And then the last thing is your position sizing mechanism. And it's really telling you how many shares that you want to own. And the way I'm looking at it is I want to look at it as how much risk am I taking? So let's get into the strategy from the book, and using the NVIDIA as the sort of the example, just so you understand. This was actually a trade, and we're actually still in, but a position that we put on based on this strategy. And the higher time frame in this sequence is the weekly chart, and the lower time frame is the daily chart. And really, we try and keep, if you have some type of a setup, you want to keep it as simple as possible. If you start adding in a tremendous amount of all these different things that need to be in place, I think, the likelihood of that being a successful strategy is probably not going to be all that great. So try and keep it as simple as possible. And what I've done here is on the higher time frame, the weekly chart, the 18 is greater than the 40, and the 18 is rising and the 40 is rising. So I've got an 18 above a 40 and both lines are rising. That's essentially what I'm looking for on the higher time frame. That tells me that I have trend on the higher time frame. And then if I go to the daily chart, I'm looking for that counter trend play. And what I refer to it as in the book, it's the sell signal that fails is really what I'm looking for. So I'm looking for a opposing trend on the daily chart. And that would be where the close is below the 18 MA on the daily, and the 18 is below the 40 on the daily chart. So I know what's taken place is I've got a pullback that's taken place because this trend is actually showing some negative characteristics. So once I get to that point, the trigger for us is crossing and closing back above the 40 on the daily chart. I have done another video on this, so I'm not going to spend too much time, but I want to make sure you understand that's what we're looking for. As I go through and I want to show you, I'm going to show you the results now. And, the idea here is I've got, on the left side, I've got it's actually the NASDAQ QQQ. And I've gone 10 years back. And what we did was we did the weekly and daily on the QQQ, which is 100 stocks. And the win rate was 57%. So the total number of trades was 1,485 trades. So again, if you're going back 10 years and you're looking at every single time we got that set up, similar to what we're talking about in NVIDIA, whenever that happened on any one of the stocks in the 100, we would buy if it closed back above the 40. And so in that situation, we had 57% wins. That's 851 wins and 627 losses. And the average profit in those wins was $1,576, and the average loss was $1,032. Now, the average, so the way we did it was every time we took a trade, we risked $1,000. So we looked at how much the size of the trade was based on where the entry was and where the stop would go, and we figured out how much it would be to risk $1,000, how many shares we could buy, and so that's how we handled that position. Now. And we did every single trade. So again, this might not be as realistic from that standpoint, but because the reality is you're probably not going to take every single trade that comes along. But what this does is gives us a very good idea of, looking at 10 years going back. I mean, anytime someone gives you an idea and they say, hey, this is a great idea, you kind of want to do some form of back testing in some way, shape, or form. And so we went back 10 years and we did it on the Qs, which is 100 stocks. I mean, it's a decent amount of trades. And what I like about this most is the average profit size is about 1.58 to 1. And the way we took profits, so we did have a strategic and systematic way of taking profits. And what we did was we broke it down into quarters. So we took a quarter of a profit at 1 to 1, we took another quarter at 3 to 1, we took another quarter at 5 to 1, and then we trailed a stop until we got stopped out of the last piece. So that's how we came up with this strategy. It's $1,576 was the average win. And again, $1,032 for the average loss. Now, if we look at the right side, this is the monthly and weekly combination using the S&P 500. So we're going through 500 stocks using a monthly, weekly. It's about the same number of trades if you look at how many trades took place over the 10 years. And the reason is that obviously we're looking at a monthly and a weekly. So the higher time frame would be the monthly, and keep it simple. So it would be as if this was the monthly side. The weekly chart would be like a monthly, and this chart would be like a daily. And then everything else is the same. We didn't change anything else. We use the same. Our initial stop would go underneath the last important low that took place before we crossed above the 40. And again, it's the same strategy using the monthly weekly combo as it is using the weekly daily. So this actually has a 64% win rate. And if you've listened to any of my videos, I've told you over time that if you use a longer term time frames, your ability to get better trades, more consistent trades you're going to have more success. But there is a negative. There's a drawback to that. You get fewer trades. You don't have as many setups, and you kind of have to make sure, and you actually have to take a little bit more risk to your stop. So in other words, if the average stop on a daily trade is like 5%, you're probably going to have to be somewhere around 10 to 12% away from your entry to make this kind of money or these type of numbers. So that's not a big deal to me. I would just change the size of my positions based on how much I'm risking. But if you notice what this is showing, the average win is 1.73 to 1, and your win rate is up at 64%. So these are really good numbers. And this is not even taking into account any improvement that could take place by doing your own due diligence, starting with some fundamentals, doing that type of thing if you wanted, or even more importantly, going and looking at the ADX or MACD and maybe filtering it down that way. Understand this was done basically just off those moving averages. Nothing else was incorporated. So we're kind of giving you some bare bones numbers here, in my view, based on the strategy in the book that I have used for years and years. So just to follow up, I want to make sure you know what our plans are for the channel and the website. Is we're planning on giving you guys the ability, having maybe in a member area, something like that, where we're going to have these setups in place, so to show both the setups and the triggers. That's where we're going with this, and we want to give you the ability to create your own strategies as well. So that's the type of stuff that we're going to have coming along. Please give me some feedback on this. I want to see if you guys understand. If you don't, I want you to make sure you understand like the categories of a strategy. If that stuff doesn't make sense, I'll spend more time on it. Give me the like. Hit that like button, and please hit the subscribe if you're not a subscriber yet. All right, thank you.